floor system for critical minerals. Big news. The global scramble for critical minerals continues, and silver is included in this system as a classified critical mineral. But before we get into what that means, let me show you the pattern that's developing. Today again, we got rejected from the $90 zone, and we came back to $83. That's 8 to 9% down from 90. And this event happened during the New York session, same as yesterday. Silver prices posted a massive reversal, falling nearly $9 per ounce in under 3 hours. Gold prices also fell $220 per ounce in under 3 hours. What pattern do you see in this scenario? Till now, we have not found a daily close above $90. Now, looking at the numbers, about 75% of you watching aren't subscribed. If this unfiltered, real-time analysis is cutting through the noise, giving you the whole story from both sides, backed by verified data, and helping you make clearer decisions, then hit subscribe. This channel isn't about telling you it's going to the moon or going to zero. It's about raw, unbiased perspective with verified data. That's how we grow a community anchored in reality, not hype. If this adds value, drop OG John AG in the comments. It helps me see what matters to you and keeps the analysis grounded in what's real. In my previous video, I discussed that on 96.97 there is our resistance on the 150 EMA on hourly chart. We're currently at 86. That's $10 to $11 below that resistance. The pattern is clear. During Asian and European hours, silver rallies. Then during New York session, massive selling hits, and we reverse. Yesterday, up to 90 then back down. Today, up to 90 then back to 83. The 90 zone is acting as strong resistance. And the New York session is where the selling pressure consistently appears. Based on all this, what pattern do you see? Up all night on global physical demand, down all day via derivative selling in New York. That's the pattern. Physical buyers accumulating if we finally break through 90 and hold. Current prices as I'm recording. Silver Western spot at $86, Western futures at 86, Shanghai spot at 102, Shanghai futures at 101, Shanghai premium $16, 19% premium. After getting rejected at 90 and dropping to 83, we've recovered slightly to 86. But the pattern of New York session selling is undeniable. Now let's connect this to the massive policy announcement. The US establishing a price floor system for critical minerals fundamentally changes the game. Price floors aren't about paper markets, they're about keeping production alive. If paper prices don't cover real costs, the floor won't follow paper. Paper will be forced to adjust to the floor. That wouldn't be a rally. That would be a repricing event. Know the difference. And here's the critical question nobody is asking. What if the silver price floor is set above the current paper price? Price floors are designed to ensure domestic production remains viable. If the floor is set at, say, $90 or $100 and paper is currently at 86, what happens? Paper would be forced to adjust upward to meet the floor. This isn't speculation. This is how price floor mechanisms work. The government sets the minimum price to protect strategic industries. If market price falls below that, the government becomes the buyer of last resort at the floor price. America is going to have a floor price set for silver, meaning you won't be able to sell or buy silver below a certain price. This is unprecedented in modern precious metals markets. The Strategic Petroleum Reserve has a similar mechanism for oil. Now, critical minerals, including silver, get the same treatment. The implications are enormous. Now let's talk about what's happening on the physical delivery side. 14.8 million ounces of silver delivery notices hit COMEX vaults in the first 4 days of February. Another 190. February silver delivery notices issued Tuesday. Total February silver deliveries spiked to 2955 contracts, 14,775,000 ounces. At the close on January 30th, open interest in the February silver contract was just 1,231 contracts, yet by Tuesday, only 2 days later, 2955 delivery notices had been issued for the February contract. Nearly 3 times a non-primary delivery month has seen historically massive silver delivery notices, and it's only the 4th day of the month. Let that sink in. Open interest was 1,231 contracts. Deliveries issued, 2,955 contracts. That's 2.4 times the open interest demanding physical delivery. New buyers are entering, demanding immediate delivery, and open interest stays low because they're taking metal and leaving. This is not normal. Primary delivery months like March, May, July typically see high delivery activity. Non-primary months like February usually see minimal deliveries. But February just posted 14.8 million ounces in 4 days. This confirms physical demand is relentless despite paper price volatility. Here's the part nobody's talking about, and it explains everything. The one-year silver swap minus U.S. interest rates shows silver market imbalances larger than during the 2008 financial crisis and the 2011 silver mania. New highs may come sooner than expected. A sell-off driven by over-leveraged paper positions is not the same as real oversupply. The structural imbalance in the silver market is at historic extremes, larger than 2008, larger than 2011, and now the U.S. government is stepping in with a price floor system. Central banks are the quiet, underappreciated, and unseen whale in the market. For the past several years, central banks, led by China, Russia, India, and Turkey, have been buying gold at a historic pace and just topped 5,000 tons for the first time in history. This relentless central bank buying acts as a demand are stable. Physical demand globally is not collapsing despite paper price swings. Today hurt. A lot. So let's get real about the risks right now. U.S. stocks are dumping. S&P down 0.95%, erasing about $580 billion in market value today. Nasdaq down 2.4%, wiping out roughly $1 trillion today. Russell 2000 down 2%, losing around $64 billion today. Risk is being sold across the entire U.S. market at the same time. Nuclear talks between the U.S. and Iran scheduled for Friday have reportedly been canceled. Oil prices are surging to $65 per barrel on the news. Geopolitical tensions escalating. China's four largest gold-backed ETFs posted negative $980 million in outflows on Tuesday, the biggest daily withdrawal on record. This is 2.5 times the previous record set in May 2025. This also follows negative $317 million in outflows on Monday, bringing the two-day total to a record negative $1.3 billion. Sentiment in Chinese gold markets is seeing massive swings. MicroStrategy's Bitcoin position is now down over negative $2 billion as Bitcoin drops below 73,000. Ethereum falls below 2,100 for the first time since May 2025. The pattern is clear, rejected at 90 during New York session 2 days in a row. Haven't found a daily close above 90 yet. 150-hour EMA resistance at 96.97. We're at 86. Risk-off sentiment spreading across all asset classes. Iran nuclear talks canceled. If this pattern continues, we could test lower levels again before finally breaking through. But here's why the bearish case is overwhelmed by structural developments. The U.S. is establishing a price floor system for critical minerals including silver. 14.8 million ounces delivered in first 4 days of February, 3 times the open interest. Silver market imbalance is larger than 2008 crisis and 2011 mania. Central banks accumulating at record pace. Global physical demand stable. The $90 rejection pattern during New York sessions is paper manipulation. The price floor system announcement is government policy responding to strategic necessity. Ray Dalio is calling for gold to be the world's new currency to replace the fiat system. It's the beginning of the end of the monetary system as we know it, which is why gold is being chosen by the central banks. For this to happen, gold would need to trade significantly higher than current levels. The entire system is being repriced. Nothing looks organic. Every asset class shows signs of manipulation. The goal isn't to fix the system anymore. It's to extract value before restructuring. The government created one for physical commodities essential to defense, technology, and energy infrastructure. Let's cut to the chase. 3 must-know takeaways before we close. Number 1. U.S. Vice President Vance announces price floor system for critical minerals including silver. This fundamentally changes the market structure. Price floors are designed to keep domestic production viable. If the floor is set at or above current paper prices, paper will be forced to adjust upward. This is government policy, not market speculation. The Strategic Petroleum Reserve model applied to critical minerals. The implications are enormous for silver as a classified critical mineral. Number 2. 14.8 million ounces of silver delivery notices in first 4 days of February. That's 29.55 contracts versus 12.31 open interest at month end. 3 times the open interest demanding immediate physical delivery in a non-primary month. New longs entering and taking metal immediately. This is the second consecutive month of historically massive deliveries in non-primary months. Physical demand is relentless despite paper volatility. Number 3, pattern established, rejected at $90 during New York session 2 days in a row. 8 to 9% reversals both times. Haven't found a daily close above 90 yet. 150 EMA on hourly chart resistance at 96.97. Up all night on global physical demand, down all day via derivative selling in New York. Risk-off sentiment spreading. Iran talks canceled. China ETF outflows record. But silver market imbalance is larger than 2008 and 2011. Structural tension building. The unresolved tension is this: price floor system being established until the price floor mechanism is implemented, Or do we break through based on physical demand overwhelming paper supply? The government is responding to strategic reality. The paper market is responding to leverage and positioning. Which force wins short-term determines if we test lower or finally break 90 and head toward the 150 EMA on hourly chart resistance at 96.97. Do your own due